Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Do you know what we have not spoken about in a while? REITs, Real Estate Investment Trust, and that's exactly what we're going to do today. We have not looked at the REIT sector in ages, and in today's video we are looking at 80 different companies that are all Sharia compliant right now and are in the REIT sector. REITs are good investments because to buy a property you need a lot of money, you need a capital, you need the deposit and everything else. So it's a good way to get into that property side of things, as well as of course they pay excellent dividends. So instead of getting rental income, you get those dividends without having to worry about tenants and buying the house and the mortgages, and all of that headache is completely taken care of. One problem with the REITs is a lot of them are in debt because they actually have to borrow a lot of the money from the banks to be able to build the houses and so on. So you're not getting the mortgage, they are getting the mortgage. So you have to also be careful when you invest in some of these REIT companies. But the ones that I want to share with you guys today, have all of them are within that Sharia compliant investment section. So for example, they are less than 33% in terms of the interest-bearing debt, interest-bearing securities, as well as that within that 5% of the business side of things. But always do your own research and find out a bit more information about these companies before you invest. So what I'm going to do first is just give you an overview of each one of these companies, and then I'm going to show you inshallah the Sharia compliance side of things to show you what Zoya is saying about these companies right now. But before we do that, as always, it takes a lot of time to put these videos together, a lot of time and resources. So I would really appreciate if you can actually like the video, subscribe to the channel, of course, and let me know if you have any questions. As well as that, it would be really wonderful to have you on the Discord side of things, and you can join on the Discord where you can actually meet brothers who are sharing excellent practices. Sharing what they're doing, what they're buying, what they're selling, as well as me sharing with you guys what I'm buying and selling, if I can talk, on daily basis, as well as getting those access to the dividend trackers that we also have, and the Sharia compliant investment ebook. Now let's get started with this. So like I said, we've got 8 different companies. We're looking for the ticker, the company, the sector. Okay, so the sector within the REITs, because that's important as well. Some of them are basically working in the industrial, some of them are own community properties and so on. We want to see how big the company is, we want to see the price, we want to see the price, fund from operation price. So we don't use PE, okay, we use price to funds from operations when it comes to PE REITs. And we want to see the dividend. So this will tell us basically whether the stock is overvalued, undervalued, give us at least an idea. Dividend yield, like we want to see adjusted FFO payout ratio. So instead of using normal payout ratio, we use the adjusted FFO here. The 5-year average dividend growth rate, dividend streak, annual payout, dividend safety, Morningstar valuation, and their price target. Okay. Right, let's get started with the first company, and that is, there's no surprise, the first company is one that I own in my portfolio, and that's Public Storage. It's a storage, self-storage REIT, almost a 50 billion market cap, right now $281 per share. It has a PE of FFO of 19, dividend yield of 4.23, which is absolutely amazing. Remember, the REITs, they are basically, as long as their payout ratio is less than 90%, it's up to 90% basically. Okay, so they have to pay by law whatever up to 90%, but this one is about 83% in terms of their payout ratio, so they still have room to grow that dividend. They've got the 5-year growth rate of 8%. Basically they've increased that dividend for 1 year. The annual payout you will get for every share of this company that you own is $12. Dividend safety of 96%, which is absolutely wonderful. Morningstar is actually saying 10% discounted right now. $317 per share is where they think the price should be. Right now it's $280 per share, which is way cheaper, about 10% below where it should be. The next REIT that we're looking at is Prologis. This is the company that works well with Amazon. So Amazon warehouses are owned by this company. So the landlord of Amazon is this company. So it's an industrial REIT. 129 billion market cap, so it's a huge one. Price right now $133 per share. FFO of 28, dividend yield of almost 3%, payout ratio of 70%, and the 5-year growth rate of 13%. They've increased that dividend for 10 years. The annual payout is $3.84 and only 61% in terms of dividend safety. So I say only because that's the safe, but again, it's anything higher than that will be perfect. So hopefully in the next few years that can go up to make us feel happy and make sure that we don't worry about a dividend cut, because they can cut their dividends sometimes, these companies, especially if the net income is not growing. Morningstar is valuation right now saying it's very valued. $128 per share is where the price should be, they think. 133 is where it is at right now, so it needs to come down a little bit to hit that even fair valued, but it's not overvalued yet. The next one is Mid-America Apartment Communities. I think there's a lot of brothers who own this on the Discord, because I've seen them talk about it. It is a multifamily residential REIT, almost a 15 billion market cap, $126 per share right now. FFO only 15.8, dividend yield of 4.64, which is quite nice. Payout ratio only 68%, which is quite nice. The last 10 years they grew that dividend about 5%. 13 years of increase in it. $5.88 is what you get for every share of this company that you own. Safety of 97%. 14% discounted right now. $145 per share is where they think the price should be. This seems really nice, and I'll show you in a second. The only concern I will have is basically the payout, the Sharia compliance side of things, but I will show you exactly where it's at now. But it seems very nice. I mean, it's actually down quite about 14%. The fact that they're actually growing that dividend, that's quite nice. And in terms of FFO, it seems very cheap. The next one is EQIX, ticker simple, and it basically is a data center REIT. So they own some of the warehouses, okay, so the data centers these companies use. So they build the data centers and these companies rent from them, and then of course put their technologies and whatever they need to do. Market cap $84 billion. Price right now is $896 per share. FFO 25 right now, to what seems a bit expensive. Dividend yield of 1.91, payout ratio only 45%, and the 5-year growth rate of 10%. They have increased that dividend for the last 8 years. You'll get $17.04 for every share of this REIT that you own. Dividend safety right now we're looking at about 68%, which is quite nice. 27 premium. I've not seen this company fair valued, to be honest with you, let alone a discounted. It's been expensive. It's been on my watch list for quite some time, but it is expensive. $700 per share is where they think the price should be, so it still seems very expensive even now, especially with the AI situation that's going on. A lot of these companies, for example, Nvidia's and so on, will use their basically data centers. For that reason, this company has also gone up with that AI data center. Everything is going to the moon side of things, so it's gone up quite a bit in the last few months. And the next one is Equity Lifestyle Properties. This is a single family residential REIT, $12.6 billion. Price right now of market cap, by the way, price right now $67 per share. FFO of 27, dividend yield of 2.85%, payout ratio 73%, dividend streak of dividend growth rate of last 5 years of 10%, dividend streak of 19%. $1.91 is what you will get for every share of this company that you own. Dividend safety 68%, payout ratio, Morningstar valuation is 14% discounted right now. $78 per share is where they think the price should be. Right now is basically 60, almost 60. 691 right now. The next one is Treno Realty Corporation. This is an industrial REIT, $5.66 billion right now. Price, current price of stock price of $65 per share. FFO 34, so it's the highest that we've seen so far in terms of FFO. Dividend yield, we're looking about 2.76. Say a payout ratio of 99%, 5-year growth rate of 13%, 12 years of increase in that dividend. $1.80 is what you will get for every share of this REIT that you own. Dividend safety of 50%. Okay, so it's lowest in this group, so I don't like that, but Of course, you have to do your own research, and if you're happy with the net income and the free cash flow and all of that stuff, then and you feel the company covers that, then of course you look into more into this company. Fairly valued right now, $67 per share is where they think the price should be. Right now it's about 65, so almost flat there. Next company we're looking at, CareTrust REIT. This is healthcare REIT, 2.94 billion, the smallest out of all of the ones that we've looked at today. Very small indeed. Price right now $22 per share, FFO 14, dividend yield of 4.95, so almost a 5%, payout ratio 75%, the 5-year growth rate of 6%, and dividend streak of 9 years. $1.12 is what you will get for every share of this company that you own. 61% in terms of safety, fairly valued according to Morningstar. $24 per share is where they think the price should be. And finally is the East Group Properties. This is industrial REIT, 8.41 billion market cap, $179 per share right now, 26 FFO, dividend yield of 2.84, payout ratio of 65%, 5-year growth rate of 13%, which is quite nice. Dividend streak of 12 years, $5.08. Again, really nice in terms of dividend payout. Dividend safety, we're looking at 37%. Really good, fairly valued right now. $163 per share is where the price should be according to them. It's Morningstar, but right now it's 179, so it's slightly higher, although it's still fairly valued. It's slightly higher. It hasn't hit that overvaluation matrix that this company uses. So there you have it. That's the 8 companies I wanted to share with you guys. They're all Sharia compliant, so let me show you that side before I move on. You can pause the video. The reason I highlighted these companies is because of the interest bearing debt is slightly high. Remember, we're looking for that 33%, or a third of that 100%. So that 33%, depending on what you're using. Some companies use 33.3, and some companies use 30%. Whatever you're using, it's closer to that limit. The rest of them are fine. In terms of business side of it, it's absolutely fine. Some of the REITs out there deal with a lot of the mortgages and so the interest, whatever. These companies don't, so a lot of them are 100%. So in terms of interest-bearing securities, it's also absolutely fine. There's no issues with that. But yeah, so overall, they seem really absolutely fine to me. The ones that I'm really interested, if we go back here, is of course Public Storage, which I own in my portfolio. Prologis is actually basically is one I'm definitely interested at, and Mid America Apartments. Okay, and the fact that it has right now higher interest bearing debt, and again, you might even want to calculate the higher interest bearing debt by going, because remember Zoya updates it. They update it once every quarter, so you might want to, currently it might be higher, it might be lower, so you have to go in there and do the maths. All you're doing is the current debt divided by the market cap, of course, and then that will give you the percentage of whatever. Okay, anyway, I'm going to stop the video here. If you like this type of content, like I said, it takes a lot of time to put these things together. I would really appreciate if you can join us in the Patreon account, where you get access to the Discord or the dividends and so on. And if you don't want to do any of that, just subscribe to the channel, share with your family and friends and so on, and click that like button as well. Have a wonderful day. Assalamu Alaikum.